Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, June the 9th. The year's 2025. Let's talk trading. Weekly, open, and gap. These videos are for educational purposes only. Your results may differ from mine. As always, let's have risk management employed so we do not lose more than we're willing to lose on any one single trade or during any one single session. So let's just jump right in, take a look at the weekly. I see we have one gap that has not filled on the Australian US dollar. Right now the pound's 13 pips above the weekly open, 44 off the high and 17 off the low, now 16. And as you can see, we are in the upper wick zone of the last 2 weeks candles, weekly candles. Looking at the month, we are 72 pips above the monthly open, 80 off the high, 85 off the low, and we are in the upper wick zone of the previous month. We're putting in the opening range for the day. We are within the opening range, opening range for the week rather. We're within the opening range for the month. In fact, we're 23 pips below the high of the opening range right now for the month. For the year, 1,026 pips above the yearly open, 80 off the high, and 1,438 off the low. We had an inside bar 4 days ago, and we are in that inside bar range. Notice we've had a bunch of monthly inside bars, but the pound was not one of them. And there's a bunch of weekly inside bars too. So inside bar traders, you've got some opportunities out there. Out of curiosity, how many of the traders watching these videos, if you guys could respond, do you trade only one pair or do you trade multiple pairs? Today, looking at the dashboard, there's only 2 pairs over 100 pips. Is everybody away on summer vacation already? Pounds clocking in at 61 pips. That's pretty sad at the moment. I see the yen's at 98. This is just crazy. And the euro's only at 53. Not much volatility. As you can see, we came down about an hour or so ago. We touched the weekly open and daily open and we bounced off. Okay, looks like it's time for the green rats to prepare to feast. We'll have to wait and see what happens. We had a failure to launch a couple times here in that launch pad. In fact, I had gone long around 43 and I had an opportunity back here to take a couple of pips, but I was banking. There's a 1 minute open gap up here, and I was banking that it was going to get filled, and of course it went the other way on me. I jumped in, and then I finally just exited on this last candle. I think I got 0.6 on the trade. But that's one of those things where, believing my own press releases, sometimes you have to say, well, this is what I think could happen, but maybe I'll just take the pips. If I made a mistake, it was when I was up 3 pips. I should have put in the break even +1. So in case if it comes back, then it just takes me out. And the thing about that is, what's smart about it is, if it comes back and takes me out, one of 2 things are going to happen. It's either going to bounce and I'm going to be mad, or it's going to go down. I'm going to be happy. It'll give me a chance to buy in at a better price and then go back up. So a lot of times putting on those 1 pip stop losses where you will, you know, exit at break even +1, they can stack up over time. Notice here Bambino Flex said to be short. We took out the weekly pivot, we took out the daily pivot. You can see here we've missed them, haven't hit the monthly yet, but we did take out that weekly. And we've taken out the daily. Notice in and out of that lower wick zone, that last hour, in and out of the upper wick zone. Only 61 pips range. We haven't broken out of the high. We haven't broken out of the low. So 45 off, 46 off the high now, 15 off the low. And weekly crossover traders, only 4 pips to the downside and 57 to the upside. Now looking at price action, you can see things have slowed down over the past hour. We had some nice movement here. The M30 candles, this huge drop. And this was one candle. I jumped in another trade here, playing on the cover. You can see here, this one just got covered. And for those of you tuning in for the first time, cover, what I consider cover is when the high of the current candle is above the top of the previous and the low of the current candle is below the bottom of the previous. In other words, it's ranged. And I'm glad I took my 0.6 pips now as it's coming back down. So it's better to be mad with a profit than mad with the loss. Something I said for over, what, maybe a couple of decades now. Okay, we just had a H4 highest low trigger there. Normally we look at the M1, and there was a trigger there at 42. You can see would have paid off nicely. Wonder, something made it dump like that. Curious. Put in a new 3-ball. There's a nice flip-flop trade to the south side. Walmal's back from vacation. We were talking before I started the video, and he's right back in it. He's cleaning up. And let's see, this is my EMA or indicator 2, EMA 5/indicator 2 chart, showing the distance between the current and previous EMA 5s or indicator 2. And let's see, I don't have the squiggly actually drawn, but one of the things I look for, like if you're in a trade and it goes against you and you want to average in and trying to work your way out, when you look at the chart, you almost always see the candles cutting across the EMA 5. And I usually look at the M30, and so I try to make sure if it hits the EMA 5, my average price is such that if I got out at the EMA 5, I'd make a pip or two. So that's how I will use that as a way to trade my way out of a mess. And you see here, this is my demo account I put that trade on, and once again, there was an opportunity to get out there, opportunity to get out there. It looks like we're going to have a flip-flop. Yes, there's a flip-flop right there. And see, we haven't pushed the range yet, so we don't really need to look at those charts. So let's see. We look at the, let's just look at the weekly right now. Price inside the upper wick zone, price turning up. Sellers weak control at the moment. We're below the previous mid and the pivot on the weekly. Lower high, higher lower inside bar. Looking at the daily, sellers weak control, lower high, higher low. Once again, inside bar. And prices between the wick zones are in the body area. Just taking a look here. You know, one thing, if you're struggling, if you make your first trade of the day on demo, sometimes what that'll do is you might avoid a problem. And just for the record, there's the open gap that I'm looking for price to hit. But right here, I think there was an H4 open or something, and price wasn't closing above it. And that was a indication. No, wasn't the H4. What was it? It was something else then. But you can look here. This was bearish. You look at M30. It was right on the close. And so there's opportunity to take profit. It never even reached the midpoint of this candle. So when you look back at your trades, you know, hindsight's 2020, but this is how you learn. So in the future, it's like, oh, well, I shouldn't do that. You can make a list. Maybe have two pieces of paper or two file cards, do's and don'ts. And remember, do's are stronger. It's better to tell your mind what to do as opposed to tell your mind what not to do. So frame your mental instructions in the positive rather than the negative. So, fellow traders, I hope everybody had a fun and safe weekend. And I'm going to wish you a profitable day, week, month, and year of trading. And as always, I want you to remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.